Hello, guys, and welcome to Blockchain Banter Trading Crypto. I'm Jen, I'm your host. I'm here with Keith Allen, TA and algo trader, order book analyst, and co-founder of Material Indicators, along with Dr. Mark Richardson, project lead at Bancor and Carbon DeFi. Happy Tuesday. Thank you guys so much for joining me. I know we missed last week, and a lot has happened since last week. Not a lot that we really might not have been expecting. And we had kind of spoken about some levels that we were pretty close to reaching, if not actually reaching. I'm sure we'll kind of take a look at the charts and pull those up in a little bit. I titled this one Tariffs, Trends, and Trading Signals and Strategies because I think the tariffs are what everyone seems to be talking about, especially in terms of how the market is reacting right now. I want to hear your guys' thoughts on the impact this is having on the market, what we're seeing, if there are other things that you guys are seeing that might be having an effect on, where we stand at the moment.
It's interesting. I remember not too long ago, right? So this would have been back when Ethereum was looking to be sort of stressing at around the sort of 3K level, and it looked like it was going to drop, right? We were there when we were sort of watching Ethereum start to touch the 20-month averages, and Keith and I were speculating on how little technical support there is underneath this thing. And I remember on that call saying that it wouldn't be too unusual for Ethereum to if it loses those levels to come back and check the much slower moving averages somewhere near the 100 EMA or SMA monthly, which was down at the time I think somewhere around $1,500 or $1,600, and that's exactly where we touched down on just recently. Now, with respect to the tariffs and things, it's always surprising to me that we can, we say these things on calls, and other technical analysts will have specific targets in mind, and there are these moving averages that kind of help provide waypoints through how these charts are happening. But when it finally happens, when these targets to the downside are hit, there is always such a good justification for why it happened. Do you know what I mean? Like, we're not Nostradamus. We're not, I don't think anyone would have, anticipated, at least back then, that, the tariffs were going to be the circus that they've ended up being. And that's not necessarily a criticism of the Trump administration. I mean, not necessarily a criticism of the Trump administration. I'm just saying that, the way that the markets have reacted to it, the way that the American voting public has reacted to it, and the drama around it seems so unnecessary, but it's exactly what the markets needed to drive the price action down to what I think Keith and I have been claiming is going to happen eventually, and it's been a pretty unmitigated
we're gonna get our 40%, damn it, right?
We're gonna get it, and we got it. And if it wasn't going to be tariffs, it was going to be something else.
There's still room for other things. Let's not act like it's done.
Yeah, that's true. That's certainly true. But yeah, that's my opinion on the tariff stuff.
Well, I think that this is the fact that we have tariffs should not be a surprise to anybody because it was campaigned on. The amount of tariffs, I think, are what has been most shocking to the markets, and it's not just the American public. And this is part of the problem. This is not just the American public that's impacted by this; it's the freaking world. And I think the underlying problem that's ongoing here is, and it's multi-layered. Number one, we know that the market has a knee-jerk reaction to every single chess move on the board, right? I mean, it's like instantly, and people who were campaigning very hard, for the administration that we have, are a lot of them are not so happy right now, right? And they're crying. Oh my gosh, what's happening? What is he doing? This is stupid. This is what he campaigned on. This is what you got. And so, it's a self-inflicted wound. But if you were calling for it, if you were voting for it, if you were campaigning for it, you're part of the infliction. Politics aside, it's how it's being executed, I think, is what the real issue is. The market hates uncertainty, and there is no rhyme. There seems to be no rhyme nor reason for how this is being executed, other than somebody's ego. And you can agree or disagree with the goal here, and a lot of what he's trying to do makes sense. It's understandable, but the way that he's executing it does not make sense, and there's no consistency to it. You can't come on, and posture and say, this is not a negotiable thing. This is how it's going to be. And then literally 5 hours, 7 hours later, post that that Vietnam called and, we're negotiating a new deal. It's one of
Did
the
you notice? I wonder if you heard any of these arguments that that it's deliberate, like the theater of it. Not me. I mean, certainly, for to stroke a few people's egos, including himself, but also that to inflict maximum damage on the markets in an
absolutely
attempt to, right, but in an attempt to
get a rate cut.
force the right, exactly, and yeah, exactly, to force the Fed into quantitative easing so that the United States government can refinance its debt. This
I
is
don't know if
one
you
of the
saw it because you guys were in Thailand at the time, but last week, Fed Chair Powell had he does these periodic, Q&As. It wasn't like an FOMC thing. It was, some, I forget who hosted it, but he does these, like periodically in between FOMC events. And literally 30 minutes before the interview started, the president posted, inflation is down, unemployment is up. This is a perfect time to lower rates. Fed Chair Powell, lower, it's time to cut rates and stop politicizing this. And then, of course, Powell is on, and 30 minutes later, and they ask him about it. He's like, no, we're not reacting to this, and they can't react to this, right? There's now noise across social media about whether the FOMC is going to have an emergency rate cut. Like, they had a meeting yesterday. Is this an emergency meeting? No, it was a scheduled meeting. Okay, and so now it's there's going to be an emergency rate cut. Well, the next FOMC rate cut decision meeting is less than a month away. I'd be surprised if they rush into an emergency cut with the meeting that close by, number one. Number two, because there is no consistency with the way the tariffs are being applied, and they're being negotiated within hours of when they're being set, there's no data. There's not enough data for them to go, okay, we know what we're dealing with, because we don't know what we're dealing with, and they don't know what they're dealing with. So how can they make a decision based on the erratic behavior of the administration and how it's being applied? He's not going to, Powell has stated that he's not going to, bend the knee at the wish of the president, and that he's not going to resign, and he's not concerned about any action taken towards him because they're autonomous of the executive branch. And so he wants to do his job. And so I again would be shocked if they rush to cut before that May meeting. And maybe if the administration offers some stability to economic policy, then the Fed can make a more data-driven decision. But it's got to be impossible to do it at this point with you're on again, you're off again, it's up, we're going to negotiate it, this is going to change, that's going to change. How do you create policy around that? How do you create fiscal policy around that?
So with all of the uncertainty, that we're speaking about, and kind of the like what you were saying, it's kind of random. Like,
And
we're not quite sure
businesses
what we
have
should
the
be.
same problem. right? The businesses that are impacted by this have the same problem. And it goes at many levels. Okay. So let's say, a business manufactures their products or parts of their products in China. Okay. They're now slapped with, it's already been 54% this year on top of the 25% that was applied a few years ago. Right. So their tariffs are way up. Right. And so they just got hit with another 34% that brings it up to 54%. And now he's threatening another 50% that gets him up to 104% if by the time the clock strikes midnight, Cinderella's slipper doesn't fall off, or whatever has to happen for them to dial back the deal or the threatened deal. But businesses have to be able to operate, and they have to be able to forecast and plan based on what they think is going to happen. And you can't hire, you can't fire, you can't order. You don't know what the demand is going to be. You can't put a catalog with pricing. You can't advertise what your pricing is because you don't know. And so it becomes increasingly challenging, not just based on the black and white. Hey, here's what the price is going to be. But how do we do business, and how do we plan and strategize for the future, whether it's the next quarter, the next year, the next 5 years, if there's no consistency with how things are being applied, and we don't know if what you're telling us today is going to be applicable in the next 5 days, the next 5 weeks, the next 5 years, or the next 5 hours.
I think with the bar that I was running, this reminded me of COVID, because you weren't really sure how you were supposed to be ordering things and what, the actual supply was going to be at the time of ordering.
Right.
And you weren't quite sure how you were supposed to be pricing things. And consumers, although they saw the bigger picture and they know what's going on, they're still not happy that you have to raise prices because of the cost that you are now, having to pick up. And it was a difficult time as a business owner, for sure. So with all of this, Keith, I was going to ask, go ahead. You want to add another thing? Go for it.
And so another part of this equation that can really get nasty is because we now know that China is not going to roll over, right? And they are retaliating, and they're pledging to fight this. Let's say China decides they're going to kill the supply chain. What's that going to do? Right? Remember the issues that businesses had when supply chains and consumers had when supply chains were broken during COVID. What if they start applying pressure to us that way?
Well, COVID kind of hit, and I don't think anybody was prepared for that, right?
Right.
I would think, or I would at least hope, that if these sorts of things, these discussions are going on and there is that possibility, then we're at least we have a plan. You can only hope that there's some sort of a plan, right? Where the US can pick up that slack on its own and not have to rely on others like China for certain things. That's the
Right, but how
ultimate
long does
goal
it
at
take
the
to
end
get
of
that
the
in place,
day.
right? That doesn't happen overnight. You can't move your manufacturing or onshore your manufacturing in a week or a month. That takes
So
takes a long time.
It took almost 3 decades to get it offshore. It'll take even longer to bring it back.
So let me ask you this then. If that does come to fruition, and this does happen, we're talking about how, Mark, you started this off saying that, you guys have been calling for this sort of pullback, right? Keith, you're like, we're getting that 40%, damn it. There's a lot that's going to still happen, right? There's still a lot of uncertainty. I don't see this ending anytime soon. So how are you guys even looking at this and trying to make sense of it? Like, Keith, before we actually started the call, you were saying that there were some crazy wicks that you had seen, right? So when we're looking at the charts and we're trying to make sense of all of this, when there really isn't a lot to make, there's a lot to try to make sense of, but there's not a lot to really sort of base these sorts of predictions off of. Mark, I could see doing like carbon DeFi where you could do buy orders and sell orders. So you're prepared for, you're setting yourself up for either case. Keith, I guess you could do the same thing on centralized exchanges as well, right? It's maybe a little bit more difficult to do.
Let's talk about the kinds of things that people might be interested in. I've got
I mean, how do they try to trade any of this? Or do we?
Well, there's a couple of like very very normal sort of indicators. I don't think I'm going to be saying anything too controversial here, although I might upset the BTC maximalist community. But the like BTC is on like a hell of a run, and it looks like it's overextended. So this is, again, I'm looking at very long time frames. So this is the monthly chart, and people usually don't pay attention to this. But so far already, from the bottom, you can see that we've had something like a 361% gain. This is in terms of ETH, right? So this is the BTC ETH chart. And on the RSI, it's already looking pretty overextended, right? We're at 85.7, almost 86. And generally these things tend to blow off top, and you will recognize that, compared to the S&P 500, compared to almost the entire altcoin market, compared to everything right now, BTC has really held up surprisingly well, right? For, for a cryptocurrency, which is supposed to be, so volatile that if you look at it the wrong way, it sort of, cries and has a heart attack. BTC really hasn't done that bad, compared to, especially, some of the Magnificent Seven stocks over the last year, for example.
Right. That's true. And, over the past week, we've heard the decoupling word a lot.
And the decoupling word. And that's usually a top signal, right? That's whenever that comes up, I'm usually very wary. Because it's beginning to breathe that sort of euphoric hopium into people, and it's generally a good time to start thinking about de-risking.
You know how we say like, 1 data point or 2 days does not make a trend.
Right.
I viewed it as a divergence, not a decoupling, because
right.
it's still, and I got some pushback on that. And the reason that I said that is because it's still, yes, Bitcoin is tariff proof, right? So there's no issue. Tariffs are not going to impact Bitcoin in the long run. But Bitcoin and crypto in general are still risk assets, and the riskiest of risk assets. So
Absolutely.
When you're in a risk off environment, well, we're still seeing the pain. And so, yesterday things moved pretty much in lockstep, I think, or at least very similarly, where we had big wicks down, flushed out. It went right past what on some of my orders were I thought were great entries, but went through great entries right into stop losses and then recovered. And so that was fucking frustrating.
I don't mean to laugh at your frustration.
No, I mean, it's okay. You the laugh will cry.
I mean, and it happens to a lot of people, right? So a lot of people got beat up yesterday, and then they're reluctant to jump back in.
Look at this wick back from June 2017. This is when the price of ETH went practically to zero on Bitcoin, just for that one day.
Mark, you thought the BTC maxis were going to hate you, and then you pulled up the ETH chart.
Well, this is the ETH Bitcoin chart. This is just the inverse.
Okay. It was the inverse of what you just shared.
Got you. Okay.
Yeah, so this is the ETH price losing, but you'll notice that it's also entering into oversold territory versus Bitcoin. And this is actually the first time ETH has ever been oversold versus Bitcoin. And the same was true in the reciprocal chart. It's the first time that Bitcoin has ever been overbought versus ETH, which is an interesting thing to note. The MACD, although on the ETH Bitcoin pair, at least with BTC as numerator, is not looking too attractive, I have to say. You can see that these are still steepening. I would really like to see this kind of curve around before it starts to look like a decent entry if you're holding a decent bag of Bitcoin. And the same is true on the the reciprocal chart. This thing is steepening, but it does look like this is headed into a blow off top. Question is, on the at least on the ETH Bitcoin pair, how much higher do we expect this to go? And realistically, like if this is headed for like maximum blow off top, we could actually get to back to 118 ETH per Bitcoin. Now, I don't know what that means necessarily, because it could be that basically Bitcoin continues to go sideways from here, at least relatively speaking, compared to the rest of the market, and Ethereum tanks, another 3x compared to Bitcoin from here, or it could actually mean that we're expecting a rally on Bitcoin.
And on your ETH BTC chart, what was your buy target?
The buy target I have on the ETH BTC was at 0.02. So I was expecting to come back to, and remember, this line has been up here for months now. But it was basically, I was looking at, this was the only technical level that I could really convince myself was meaningful back when we started to lose this this trend line. And so, yeah, that's another where, we're practically there already. That's only it's only another 12% from here. So, that's 99% of the journey already, right? When we lost the trend line, it was 40% down, and we're already, three quarters of the way through that.
At 0.02, we're there. It's at 0.19.
Yeah, it's very, very close. And that's not to say that, that level, there's nothing gospel about that. If you really wanted to be, if I wanted to make the Bitcoin maximalists happy, we could say that actually coming back to check this, all-time low is totally feasible, and it is, especially during market conditions like the ones that we're seeing. And that's another 55% drop from here. I don't think it's going to go that low. Like, I honestly think that this is probably going to at least see a small relief bounce, but we will see. But yeah, the MACD is looking pretty horrible. Although the RSI being an oversold territory does make this kind of attractive. I don't think that we're going to. What I'm basically saying is I don't think the momentum that we're seeing on Bitcoin versus the rest of the altcoin market is sustainable. Whether that means that the altcoin market is going to pick up, or whether Bitcoin is going to start turning around and going with the rest of the tide, remains to be seen. But yeah, these levels of Bitcoin outperformance are unprecedented, right? Bitcoin has never really performed this well versus the rest of the market before. Could that mean that we're on the epoch of a new era for Bitcoin adoption? I doubt it, right? I think that in general, when you hear hooves, think horses, not zebras. I think that we're headed into very bubbly, overbought territory for Bitcoin, at least with respect to the rest of the market. With respect to the US dollar, I really don't know. The US dollar has started to lose a lot of strength recently. Again, this has to do with tariffs, the trade war weakening, America's international standing. There are conflicts mounting all over the planet because of these and other reasons. A lot of countries have started repatriating assets and scaling out of the US dollar and things. So really, like, it's actually a good time to start, measuring these charts in a numeraire other than the US dollar. And I haven't really decided on what I'm going to be doing it with yet. But I think gold is actually a super interesting candidate. And remember, we brought this up a couple of weeks ago, and I've been having fun with that since. So I'm still a strong advocate for that as an alternative way to do technical analysis.
That was definitely an interesting one.
Sorry, Keith, what did you say?
How about measuring in Bitcoin?
Yeah, measuring in Bitcoin is good as well. It's just that Bitcoin is, it moves too quickly, I think, to be useful. I say that, but here I am. This is the ETH chart versus Bitcoin, so apparently it does mean something to me. But measuring the price of things like, copper and rhodium, platinum, palladium, and things in Bitcoin is kind of meaningless because the Bitcoin price has appreciated so many orders of magnitude over the history of those commodities that the chart just doesn't mean anything until Bitcoin stabilizes.
What do you think has the U.S. dollar has been the world reserve currency since what, World War II, something like that.
Yeah,
Um,
roundabout.
and this is, and we've talked about this before. I'd mentioned Ray Dalio's book on principles of a changing world order, and he posted something yesterday that I shared on my X channel, and I actually ran an analysis with Grok to take a deeper dive and summarize it and explain how middle class Americans should prepare and position themselves if this is indeed happening. And that's a lengthy but worthy read for anybody interested in it. You can find that on my X channel. But I think, at this stage, right? So let's say, and I've said for a while that I felt like China and Russia were colluding to really destabilize the U.S. dollar and shake up the
Well,
world order.
even openly, right?
Right.
That's the advertised purpose for BRICS, right? That's why the BRICS currency for trade in between Russia and China and other competing countries exists.
So now, with our eyes on the future, could and these things don't happen overnight. Things take years to develop and materialize, right? So let's be clear on that. It's not like you're going to wake up tomorrow and Chinese yuan is going to be the new world reserve currency. But as this evolves, there would be pushback, probably pushback on any sovereign currency at this stage of where we are in the world, right? So what do you think makes more sense? Would it likely be gold, which was the standard but hasn't really been observed or maintained as a dollar for dollar reserve on currency since the 70s, since Nixon in the 70s? Or is Bitcoin a more likely candidate?
I think Bitcoin is appreciating in value too quickly to be a good candidate.
Well, but it's not always going to appreciate at this value, right? And
Right.
if we
Well,
look
yeah, but
if we look
I
through
will
time, if we look
I will
through
concede the
time,
point.
the risk, the reward has decayed a lot, right?
Absolutely. Yeah, yeah.
So with
So
more institutional adoption, um, and more broader adoption, it is eventually going to stabilize, I would think.
sure. Well, yeah,
So
and this is the huge irony. So, like, I think, well, people like Michael Saylor, will often espouse that Bitcoin is like the perfect money. It's terrible as money, right? Ironically, Ethereum is much better as money because it's losing value, right? You don't want to keep a cash asset, um, or spend a cash asset, that is likely going to be worth more than it, in the future than it is today. This is why a good example of this is the Bitcoin pizza that people celebrate, right? The fact that Papa John's was paid something like, twice their company's market cap in Bitcoin, for a large pizza. That's true, right? That's like literally how much was paid. Um, it is a good reason to not use Bitcoin as money. For Bitcoin to become something that you can actually use as a lubricant for trading goods and services, you really do need it to either stabilize or depreciate, right? Generally, you prefer it to depreciate. It's why we target, inflation rates that are non-zero. We expect and desire, the currency that we're using day to day to lose value over time. Otherwise, no one would spend it. And I'd certainly Bitcoin doesn't have that property yet. It could, it would be interesting to see what the cryptocurrency community would think if the Bitcoin price started to stabilize. It's in a bit of a, between a rock and a hard place, because I think it's become viewed as much more of an instrument for investment, than for actually using as currency. And so the moment that it does kind of hit that plateau, and people are more comfortable, spending it rather than hodling it, I think a lot of people might lose interest in it very quickly. I'm not sure how much I'm looking forward to that day, and how the Bitcoin community is going to react to a Bitcoin that's no longer appreciating in value. But it might be here sooner rather than later. So I won't be wondering for too much longer, but certainly not this year, certainly not next year.
Agree.
Keith, do you want to pull up your chart and give us a little bit of what you're looking at on your side as well? It's a good point, by the way, Mark, about it being deflationary, and if it's more valuable, you're not necessarily going to want to spend it. But then at the end of the day, what does that actually mean for, the demand for Bitcoin?
It's gonna have to figure it out eventually. Like Bitcoin does,
Right.
like it's one of the things that doesn't get discussed often enough. I think it would be much better if we kind of drove some of these issues out into the harsh light to examine them, because Bitcoin also has a centralization problem. The overwhelming majority of the hash rate is owned by only 3 organizations, and those organizations are not necessarily the kinds of organizations that you would expect would have your best interests at heart. Like it has some issues, and I don't think is this me doom saying Bitcoin? Of course not. I don't think Bitcoin is at any immediate risk. But I think that ignoring these things breeds complacency, and that complacency becomes a massive security vulnerability for the network.
Yeah.
So in terms of what we're seeing in the charts.
Wait, are you going to share it?
Oh, that would be helpful, wouldn't it?
I mean, it is easier to follow along when we have the visual. Yes.
You see, we take a week off, and
it's what happens.
I forget how to do everything. Let's see.
I did share while Keith is doing that, by the way, what he was talking about with his post the other day. I did share that in the comments. So, and I also responded to it or added it as a comment to the actual broadcast on X.
Oh, cool.
Through the underneath the Bancor account. So if anybody wants to check that out, I recommend visiting one of those 2 places.
Cool. Thanks for sharing.
Of course.
I just saw a headline come across. White House announces 104% tariff on China. Perfect.
Oh, let's see what we're getting. Maybe we might see it live.
No, right. Can we see it in real time?
Yeah.
Or maybe it just doesn't matter anymore.
Let's look at fire charts.
we can see a candle. I see a red candle going in real time right here. We'll get to fire charts in a second, and I want to show you what got my attention here.
Now you're on the daily.
Yes.
Right?
The first thing that and I had marked this a little while ago, that we knew a support test was inbound, and what I was watching for was whether we created a lower low here or not. And as you can see, we blasted through the lower low, and to me that opens the door to lower levels. Yesterday's recovery was nice to see, but short-lived, as it seems. Just an absolute metric ton of technical resistance in this box between not just the 21-day, the trend line, the 50-day, and the 200-day moving average, but also if we go to, we've got a new metric we've been playing with. It's still in beta, but it is called Timescape, and it basically marks quarterly and annual open. Well, you can set it to any time frame, but it's we're finding that quarterly and annual opens seem to have some value in terms of analysis. So if we look here, we can also see that we have this is the first week of the quarter, which we've lost here today. And then we have the quarterly open, lots of resistance right here as well at this point. So that also fits inside that box. In terms of what we're seeing in fire charts, this is, we have some decent depth of the liquidity here, which is good to see. And typically the brighter side, the side with the highest volume. So if you're new to fire charts, the brightest spot on the chart is the most volume, highest volume on the chart. And if I take all the filtering out, we could see the one little white spot in that time frame was 93 million. This was back in March 13th. And now we can see, this is our guy Spoofy the Whale that we've been tracking. He keeps moving these big blocks of ask liquidity up and down, and price seems to move with it. And here we are seeing this suppression one more time. So there's a block here and there's a block here. And this one is right here around that, basically blocking that quarterly open, somewhere in that range. And so this is, my expectation is if price does move its way back up here, then these will get either moved up or roof pulled and go away. And then they reappear, right? We've seen this happen many times before where they pull and then it comes back down. They pull, the market goes up and then it comes back down. So I'm going to apply a little bit of filtering here to make it easier to, build some contrast in the charts. And we can see that we have a little bit of, heavier concentration down here around the 73K range. But it's going to take a bigger block, above that level, really above 75, to keep us from going to that, 69 to 72 range. Or what's this, 70, 73. So those targets to me remain valid. And I've heard a lot of different speculation on different levels of whether it's, 73 or 71 or 70 or 65. You guys know I am kind of partial to that 69K level. And for anybody new, the reason I'm partial to that 69K level is because it's the 2021 top, and we spent so much time consolidating in that range before we actually broke out. So obviously it was the 2021 top way back here, and we took a long time to get out of it. The 2021 mid-cycle top was here. This is why 65 is a target for some people, because we had that mid-cycle top there. But in terms of, I have this chart open, in terms of what we're seeing, there are so many instances, and we haven't shared this in a while, so I'm just kind of showing this again. There's so many instances of big corrections, 30, 40%. Here's a 75%, another 39%, 34%, 41%. This one was 56%. So there's plenty of occasions where we had huge corrections in bull markets, and the market continued. The problem that I think we are encountering now is this is, again, a self-inflicted wound, and there are many, how should I say, there's uncertainty and there's no stability in how this is going to resolve itself. No one can say with absolute certainty, oh, we know by such and such a date he's going to work they're going to work this out, and this is what the new norm is going to be. Once the market has some confidence and some stability in what the new normal is, the market will adjust to that. But as long as there's all of this uncertainty, it is just nearly impossible for the market to do what it wants to do.
I think a lot. Oh, go ahead, Keith.
One metric that you guys also know that I watch is the RSI here on the weekly. This is, look at where we're at. We are testing a key level here. We're still above it. Yesterday we were nosed right up to it, and then had a little bit of a reversion reversion. So we'll see how this transpires this week. If we do wick down below it this week, that in itself doesn't scare me, but I would want to see us close back above it. So that's something to be mindful of. In terms of back to fire charts, in terms of the liquidity game we're playing now, as you can see, we got a mix of whale buying and selling. Brown whales are buying, purple whales are selling at the moment. Historically, purple has really dominated the order class. the order book in terms of Bitcoin price, but sometimes we see divergences in that. And at the moment, as you can see, we have more bids coming into place here, and we have almost thin air to take it back to the upside. But when you get this news, as we just saw coming across the wire, and I haven't even read the story, I just saw the headline pop up in my notifications that he's increasing tariffs. I can tell you with a front row seat to the circus. My wife's the company my wife works for manufactures in China, and so they were reeling on last week's announcement of 34% tariffs, and this is going to be
Brutal.
Now, their whole industry is going to be facing the same problem. So there will not be necessarily a significant price advantage for anybody, because I don't think any of them are, they're in a very niche industry, and I don't think any of them are. I think all of them are actually, manufacturing in China. So how are they going to counter that? How are they going to deal with it? And how long is it going to take for them to deal with it? Right. So obviously there's going to have to be price increases. They can't absorb this much. They've absorbed in the past. They've absorbed a lot. They can't absorb this much. So that's going to be passed on to the customer. The customers are commercial customers that then sell to retail. So they're wholesalers. And they're in the in the building industry. So what's that going to do? If costs on all these materials are going to go up, what is that going to do to the price of homes and apartments and offices and such? So there is a ripple effect through the entire economy over a move like this. And even if it's a bluff, it is creating turmoil. It's creating uncertainty. It's destabilizing the economy. People are concerned of whether they're going to keep their jobs or not. So are they going to go out and buy houses? Are they going to go out and go on vacations? Are they going to go to expensive restaurants?
Not very likely with all the uncertainty. Keith, I want to ask you a question. Well, both of you. You were saying that a lot of this is self-inflicted, and I think this is a reason that we're seeing a lot of this sort of panic or reaction. Something that I'm seeing a lot of also is, and I don't know, so maybe you might recall, how far into like some of the last bull runs did alt season come around? Because this seems to be something that is like growing to be a bigger sort of narrative, right?
Alt season tends. Oh, sorry, I didn't mean to.
No, go ahead.
Alt season tends to coincide with quantitative easing. So the alt season that everyone remembers is the one from sort of the DeFi summer era, which was when after the COVID crash, but more importantly, in order to stave off an early recession, the markets were injected with huge amounts of cash. The government itself was buying securities, stocks, that kind of thing. That was a really good time for markets. That's really where alt season begins and ends. When the United States is in quantitative easing, the altcoin markets tend to do pretty well, and when it's in quantitative tightening, or at least it's not in easing, that's when it tends to lose value. That's true basically, by the way, of the altcoin markets basically match all of the stock markets bar the 7 stocks that have been carrying the S&P 500 for the last 5 years, right? If you remove those, they tend to track the price of things like Ethereum and Avalanche and stuff relatively well. So yeah, we're really waiting for a change in monetary policy. It's until that happens, it's very difficult to see an altcoin market, picking up in any significant way. There are always going to be a couple of outliers. There are assets within the altcoin markets that do extremely well for different reasons. But as an asset class, these are the very risky assets. They behave a little bit like penny stocks.
And
so
there
you
may
really do need.
be there's the chart I'm showing you right now is price returns and drawdowns, and as you can see, the vast majority of alts over the past 14 days are down deep in the 40 to 50% range,
Yeah.
right? So let's see, 45%, 27%, 31%, 63%, 40%, 48%. Some of them not faring as poorly, or some of them recovering nicely. But I was wondering if this might trigger, if what we're experiencing now might trigger an alt season. But I think there's so much concern about alts that we're seeing the capital rotate into
What do you mean so much concern about alts
and USD, right? I've shared this chart before, and alts are getting annihilated. Here's total 3. That's the purple one. Alts getting killed. Bitcoin dominance, way high at 63.5%. USDT dominance, almost at 6%. But we've been seeing, even when USDT dominance starts to back off, we'll start to see some money rotate back into alts. But for the most part, Bitcoin seems to be the safer spot in crypto. That's where the sentiment seems to be. Now, I'm wondering if what we're dealing with right now could be positioning us to consolidate in this range for a while. And if Bitcoin starts to chop here for a while we wait for the government to sort out this mess, if Bitcoin chops here, then potentially we could see alts start to recover. We see some money start to rotate back into alts. I agree with Mark in terms of when QE happens, and I'm wondering if potentially rate cuts in May or June might be enough to trigger that.
There is some, a few people have been sounding the alarm bells that this is the beginning of the bear market.
Right.
There's one strong reason why I don't think that's what's happening. I do consider this to be a temporary pullback, but I concede that this could be the end. One reason to believe that it's not is that generally what characterizes the bear markets of late, so the last 2 cycles, is that you start to see liquidity start to dry up globally, right? Not just in cryptocurrency, but in every single asset class. And actually, liquidity is still on the rise despite the falling prices. And so I think that the market still has some legs under it. That's generally the signal when liquidity dries up that actually the markets aren't going to recover for a long time. But there's always an exception. Maybe this is it, but I don't think it will be. Again, when you hear
so the beginning has to start somewhere, right? And obviously, when you're testing macro support, then people think that okay, maybe that's it. Now, yesterday in my analysis, I went back to my original trend line, which I have. In September we adjusted because we started getting on this crazy trajectory. But the original trend line dating back to the FTX crash had us really leaves more room to say that the trend is intact. I think that what Mark just shared with us about global liquidity is a very, very important factor. I also rely on this right here to tell me whether or not we're moving into bear market territory, because below this line on the weekly, sustaining that is historically been bear market. That said, and this includes the global liquidity situation, it includes where we sit structurally with technical analysis, it includes all of the things. What we're seeing, what is causing this, is unprecedented. We don't have any history that can tell us how Bitcoin is going to react or how crypto is going to react when this whole thing shakes out. And because it ain't done, right? He just ramped up another 50% on China. And tomorrow he could do another 50%. There's no limits to what he'll say or do. So point being, he could break it. He can break the economy. He can break the market. He can break the structure just because of his actions and his failure or refusal to execute in a stable manner where market participants, and not even market participants, where the economy and global economies can actually plan and execute business.
So we only have a minute left. I don't know if you guys have a hard stop. If you have to drop, I understand. We're talking about businesses, planning for these sorts of things. You're talking about how you wouldn't be surprised if, where was it on the actual chart? I couldn't see it exactly, where you were saying you wouldn't be surprised if we did a little bit of consolidation here. And that I don't necessarily think would be an unhealthy thing for us. We talk about how consolidation is healthy, especially
Absolutely.
when you see that big run up right there, a couple green candles, and we blasted straight through that.
Absolutely. So anything above the 2021 top, I think would be great. I mean, we're here right now, but this wick right here makes me think that we could be going to this next level. And you remember when this happened, I'm screaming, straight lines aren't sustainable. Where are we going to consolidate? We found, 3 or 4 days right here. And then boom, that doesn't really count for much consolidation. There's no strength here.
Right.
There's nothing structured. This house is built on toothpicks and only 3 of them. Right. So there's no stability here for this to hold. This could conceivably be considered a double bottom if it holds, but we'll see how the day ends on the announcement of this new 50% added to China. I mean, he's stacking in a day. I mean, in a week, in the same week, he's up what 84%.
Yeah, there's a lot to look forward to today. I say that, I mean, I think there's going to be a lot that's going to happen today. I don't normally sit and watch the charts, but I think I'll just kind of keep an eye on it just because that news came across just as we were pulling up the charts.
Right. So now TradFi is way off session highs and giving it back. Right. So let's see what happens. Let's see if TradFi can hold the day and if crypto can bounce from here.
Yeah. Well, I'm sure we'll have lots to talk about next Tuesday.
Yeah. Well, at the moment, the best pricing you're going to get anything from China in the U.S. right now is probably wonton soup.
I'm a
Go to a
fan
Chinese
of wonton.
Restaurant. That's about it. Everything else is going up.
We'll stock up. That's what I'll do.
Right. Well, guess what? We might need to stock up on ramen because that might be all we can afford when this is said and done.
But there's going to be no taxes on our gains, so we could buy more ramen.
Right. Right. So
it comes full circle. This isn't so bad, guys.
I heard Navarro say that today that they're gonna, there's gonna be a tax break in the next couple of months. Well, they haven't negotiated anything, and they're losing support. Republicans
I saw tax break I saw no capital gains tax.
Well, no capital gains tax on U.S. the proposal is no capital gains on U.S. based crypto projects held for a year or longer. And that will be great if it happens. What's that mean for Bitcoin? Bitcoin isn't a U.S. based project.
Yeah, that kind of sucks because it went from don't be in the U.S. Mark said, thank you everybody for joining, and he would see us next week, by the way.
Okay.
He had to drop, but it went from you don't want to be in the U.S. It's very, very sensitive, right? And unsure regulation wise to now you're being rewarded for having taken that risk. It's a little bit off-putting.
Right. So they are proposing in Trump's big beautiful bill, they are proposing tax cuts, not crypto related, but in general. But that requires support, and the president is currently losing support. So that bill's not going to be a slam dunk.
Well, another exciting week of news and tariffs and rates and all of the above, right?
Yeah, I'd love to get all of this political, economic bullshit out of our heads so we can just like trade and get back to charting the market and dealing with technicals. But this just throws variables at us that makes it really, really difficult to make decisions. For me, I've taken a couple of scalps just using the mean reversion indicator. And
yeah, you said that one's your favorite, right? If anybody hasn't checked this out, I
but
did
it's like,
say check out material indicators. Be sure to check out the actual site and what they offer. This is what Keith is showing us weekly.
This is our MTF mean reversion indicator, and it's in times of volatility you want to be using higher deeper deviations to get these entries. I sometimes use it for scalping, and I sometimes use it for buying the dip, to DCA myself into a position. And I thought that this might be a good time to do that, but I'll be honest with you, scalps, take the money and run right now until this settles down a little bit, I think is the name of the game.
Playing it safe. It's like what you were saying. It's kind of holding on to what you've got is half the game.
If there are assets that you have conviction on that you plan on holding for a long time, then yes, you can use it to buy dips. But I am, after what I'm seeing here over the past couple of days, I think I'm moving into the, I'm still holding my Bitcoin, but in terms of alts, I think it's a sell the rip environment until this stabilizes.
Yeah. All right. Well, so alt season might still be might be on the table, but not at the moment. Not looking good.
Not for a while. Not until at the very least. At the very least, let's get some rate cuts. And then
I think at the very least, let's hope for that consolidation, at that 2021 high that you were talking about, right? I don't think that would be so bad. How much farther down is that from where we're at currently?
Well, that actually gets us to that 40% mark that we've been looking for, right? So here's the all-time high.
This isn't so unrealistic, and it's not so bad. I think right now everybody's just in full-blown panic mode.
We're still only at less than 32%,
right?
Based on yesterday's wick. And so if we went all the way down here, that's still only 37%. And that's a full retrace of the Trump pump that began here on election day.
Right.
So that would be justice served, in my opinion. Edging down lower would be a little bit scary, but at some point, I'd rather see the consolidation up here than losing this. If we lose 2021 top again, then it really becomes a bigger challenge to break that. And I would be concerned that we're going to lose this line as well, and it's over.
Lose that line. Where's that at? 62-ish? 61, 62?
Yeah.
Yeah. Okay, so those will be our key levels now, right? I mean, they've been for a while, right? But I think they're coming more into like play.
Yeah. Right, my concern is if we're sustained below, basically 75, then we break this RSI.
Yeah.
So I don't want to see anything sustained down at that level. I want to see a quick recovery. If we lose it, I'd like to see a quick recovery, and then we're back up into, bull trend.
Right. All All right. Well, thank you, Keith, so much for sharing all of your thoughts and everything that you're seeing. To all of the viewers, if you're not already following Keith on X, it's KA Productions. Material Indicators is MI_algos. Mark a follow also. I'll throw his handle and stuff here since he's already gone, so that everybody can kind of follow the guys, see what they have to say, and check out Material Indicators and Bancor's Carbon DeFi. If you're trading on centralized exchanges or on-chain, whatever it happens to be, you know, tools there for you guys to hopefully stay one step ahead of, I mean, maybe not this market, right? Kind of hard in this market, but you got the right tools. At least you're that much closer.
Just resist the urge to overtrade. Take a breath every once in a while and let this thing settle down.
Awesome. Thanks, Keith. And thank you to everybody who tuned in today. We'll see you next Tuesday.
All right. Thanks. Have a good one.
Thanks. You too. We'll see you guys.
All right. Bye-bye.